Hello, from LPL Financial. Welcome to The Talking Point. I'm your host, Quincy Krosby. Good morning. It's Quincy Krosby. This is The Talking Point. It is Monday morning, July 18th. Thank you for joining me. It looks as if we're going to have a positive open this morning. The earnings season is well underway, and so far, earnings are a bit lower. Revenue growth is still strong, but what we're looking for are the operating margins, because obviously companies have had to deal with higher pay, companies have had to deal with higher costs across the board, still some supply chain issues. And by the way, I just want to put an asterisk here. We are seeing reports that the supply chain globally beginning to unwind, the challenges beginning to ease. Now, granted, I do want to report, though, that there are concerns that maybe as those supply chains, ease, perhaps consumers and companies are not buying as much. But that's a whole other story at this point. It will be good news when we see supply chains beginning to ease. Also, I do want to report that when we thought that we saw COVID easing in China, especially with one of the most important areas, which is Shanghai. There are reports now that Shanghai is reporting more COVID. We'll see whether or not that is going to lead to major lockdowns. They had over 2 months of complete lockdowns, then they started to open, and now again, just reports that they're starting to see a pickup in COVID. Remember, China has a zero COVID policy. If they see COVID spreading, they are going to shut down an area. The reason we keep mentioning Shanghai is it is a major factory area, finance area, and home to one of the deepest ports. They have a deep port. They've got river ports. They are responsible for getting things out of China and into the global shipping routes. That said, we are going to be paying attention this week in terms of earnings. We're going to hear from American Express. We want to hear what they have to say about consumer spending. Then also D.R. Horton. They are one of the biggest builders in this country. Some say they are the biggest builder in this country. It'll be important to see what they have to say. And this week especially, in terms of data releases, we'll get to that in a minute, but it is about the housing market, one data release after another this week. So D.R. Horton will be extremely important. Also, we'll hear from Lockheed Martin, and I'm paying very close attention to Lockheed Martin because we are seeing spending pick up, not just in the U.S., but around the world on military systems. So we'll hear what they have to say about the contracts they've received from the U.S. government, but whether or not they have any when I say exports, orders coming in from overseas. Also, Johnson & Johnson, Netflix. That comes after the bell, and what we will look for are subscriptions. We know that subscriptions are down, but we also know that Netflix is spending a lot of money on some of their actual movie that will be shown in the movie theater. But we want to hear especially about subscriptions. This week also, we'll hear from Bank of America. We just heard from them. Their numbers are down now. They came in before the open. But you get a sense that things are not falling off the cliff in terms of earnings. And this is what is important as we go through this. What are they seeing down the road? We're going to piece this together as we go through the earnings season and get a sense of where we will be headed. This week also, I want to mention, because this morning oil prices are up, we're seeing actually commodity prices up. Copper is up for the first time in a number of weeks. And as I said, oil prices are up too. The dollar is a bit weaker as we start the week, and that is also helping. But what I want to point out in terms of, the overall picture is that this week, while we're not going to have any of the major oil companies, oil and gas companies, the integrators, that's what we call them. We are going to hear from Schlumberger. We are also going to hear from Baker Hughes, and we'll get a sense of what the suppliers to the big oil companies are saying. And that's, I think, going to give us a picture of a demand in the energy sector. Also this week, in terms of the data releases, let's go over this. The National Association of Home Builders, that will be today. They have had 6 months of declining sentiment coming out in this index. We'll see in terms of the confidence whether we see a 7th month that we'll get that actually today. We're going to get building permits, housing starts, and then we'll get existing home sales in the middle of the week. The initial jobless claims on Thursday will be important. And why? Because we are looking for signs of whether or not layoffs are picking up. They are picking up, but to what degree are they picking up? And this is going to be important. You're seeing the market pay closer and closer attention to initial jobless claims. Also on Thursday, we are going to have the Philadelphia Manufacturing Survey. This comes from the Philadelphia Federal Reserve. And this is extremely important because we had started to see a downward trend coming from manufacturing across the United States. Good news was that last week we had the Empire Fed survey. That covers New York, New Jersey, and Connecticut. It's not one of the major ones that we look at, but Philadelphia is. But the good news that came out of the Empire Fed survey was that it actually turned up again. And embedded in that number was that they started to see shipments coming in better than expected. Remember, the supply chain is beginning to ease, and this is what we want to hear from the Philadelphia survey too. Are they seeing that the supply chain is easing? And it will show up in that report. So that will be something that the market is going to pay attention to. We're also going to get leading indicators on Thursday. And then on Friday, we are going to have a flash report. This will come from S&P Global. They are equivalent to some degree from the Institute for Supply Management, but these are important reports, especially when we are so focused on growth. How are we doing in terms of growth? A flash report means it's not the final report, but it's an up-to-date report. We'll get it in terms of the service sector and also manufacturing. We call it a flash report, just a snippet, quick report, but giving us a more up-to-date look at manufacturing and the service sector. So it's a busy week in terms of data releases, but the good news is that on Friday we had an upbeat report from the retail sales. So why did Friday close up? One reason was we had options expiration. That always puts more volume into the market. And also we saw that the retail numbers were up, retail sales. You know, retail sales, 70% of our economy comes from consumer spending. That's why it's so important. But it's also important in terms of where we think the Fed is going to come down at the end of the month in terms of their rate hike. Initially, the market thought it was going to be 1% or 100 basis points based on the consumer price index that moved to 9.1%. Then we heard from a Federal Reserve Board member, Christopher Waller, who said, look, I'm not ready to say that. He said, you know, if we need to have 1% or 100 basis points, okay, but I'm not ready to go there. He said, I am not ready to say we're headed for a recession. He said the labor market is still solid, and also I want to see whether or not retail sales are holding up. And indeed they did. Not great, but it certainly wasn't a nosedive. If you're in the camp that says we are in a recession now or we're headed for a recession, you might say, well, you know, Quincy, a lot of it had to do with people going to the gasoline station. That's why the report was up just over 1%. Well, there was a bit more than that. We're going out to eat. We're going places, we're flying places, and we're staying in hotels. That's a bit more than just going in our cars and stopping in, to fill up and then maybe go inside and buy something. So that was something the market was focused on because Christopher Waller, a member of the Federal Reserve Board, he's considered to be not hawkish, not dovish. Maybe if you had to give him something, he'd be more hawkish than dovish, but he's pragmatic. And he said, I'm going to wait to see. And by the way, after that report came out on Friday morning, in terms of retail sales, the Fed funds futures market actually pulled back its expectations of where the Fed would come on July 27th when they come out with their statement. And there it looks more like it's 75 basis points rather than 1% or 100 basis points. So a lot for this market to digest. We have the earnings reports this week. We have the data releases this week. And we are also watching, above all else, where oil prices go, because we know that this is extremely important, and it's become extremely important for the Federal Reserve. Keep in mind that the Fed typically just pays attention to core. And we know that rents have gone up, and the Fed's focus is on core prices. But what are we seeing? We're seeing them actually also talk about food and also talk about energy, which is in the headline report. And why would they be broaden their view? Because they know that's where Americans live. We live in the headline. We live buying food. We live buying oil and gas and so on. So this is why. Now, in terms of gasoline prices, they're down. They're down below $4 in most of the country, coming down below $3.90 a gallon of gasoline. This is extremely important. It's important for inflation expectations for the U.S. consumer. We know that the U.S. consumer, when driving back and forth, even if you have an electric vehicle, you always see those prices at the gasoline station. And we know from studies that when those prices keep rising, Americans' view of where inflation is headed actually moves higher. Similarly, when those prices come down, expectations come down. And in fact, the U.S. consumer in the last report said that they think over a 5-year period, consumer inflation expectations are down below 3%. That's very good news. So we're watching that gasoline prices. The president went to Saudi Arabia. He didn't come back with a deal, but this is, I think, extremely important right now, and that is expectations for OPEC at their next meeting. We know that OPEC Plus is meeting on August 3rd. Are they going to come out and say that they can produce more and actually get more oil to the market? Right now, as we do this call, it doesn't look likely. Now, something may change, but it doesn't look likely. But the expectations are that they will say there are still supply constraints and they cannot pump out anymore. Certainly, Saudi Arabia edged in that direction in the president's visit. But all that said, we don't know what their expectations will be once they meet on August 3rd. That also is important because OPEC came out with a report. And who's OPEC? For those who don't know, they are the large cartel that controls most of the supply in the Middle East and also in supply with the OPEC members who come from South America. There's also OPEC Plus, and that's where Russia fits in. The U.S. is not within OPEC or OPEC Plus. I just want to make that clear. But their view for 2023 has an uptick in demand that we will need 103 million barrels per day. Whoa, that's a lot. And the question is, where does the supply come from? So these are all questions that, have to be answered. But the point here is that right now in the U.S., gasoline prices are down, and that's good news for the consumer. We'll see how far down it goes. Copper is also, prices are up. Oil prices, though, are also up. So this is going to be interesting to see how this week it works out. Oil prices are up. Why would copper be down after it's been up rather, because it's been down week after week. The U.S. dollar has weakened, and there's also a view that global demand is starting to pick up, that the economy, the global economy, is not as in dire shape as we had initially thought. The ECB, by the way, European Central Bank, is meeting this week. Expectations are that we will see a first rate hike from them in 11 years. Remember, the European Central Bank had rates at negative rates, and now they're easing and they're starting to push the rates up because of inflation there. So an awful lot for the market to deal with this week, but certainly the market is feeling a bit better. Last but not least, I left this for the very last. It looks as if the small business owners will not be getting a tax hike of 3.8%. The deal that the administration would like to get through looks as if it is on hold or may not even get through at all. And part of that deal was to tax the small business owner 3.8%. It looks as if it will not go through. Very important. The U.S. small business owner folks, the backbone of this country in terms of jobs and in terms of, paying attention to where they see things are going. I focus on that every time those reports come out. And this is indeed good news. Have a very good week. Please don't hesitate to get in touch. Take care and take good care of, you always do, of your own clients. Please listen to our podcasts and our daily reports. Thank you so much. This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and are subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer, member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.